The dollar finally bounces back after consecutive heavy selling, but is it going to last with key data this week in the form of non-farm payrolls, so labor market data? We've got the Fed's preferred measurement of inflation and GDP, a big one, guys. Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So the greenback, it managed to finish in the green, after all of this heavy downside pressure. And obviously, we've been going over this in the past videos. The downside pressure is because we've had heavy, and that's been evident. We've seen various reports, heavy capital flows out from the United States and into other economies across the Eurozone, into Asia, everyone just wanting to be frank, get the hell out of the United States because of all the uncertainty around the tariffs. Obviously, remember Trump went to attack everybody with tariffs, and then we had the big Chinese and US trade war, essentially, which is still ongoing. But in the latest week, there have been some calming of concerns around that because both the United States and China have indicated that, look, they're keen for dialect and they're keen to reduce these tariffs. They know they're unsustainable for both parties. So that has provided a little bit of relief for the US dollar in terms of that uncertainty there, and we have managed to just about finish in the green. We're finding some support, as you can see here, at this 99.50 area. Now, I did know, didn't I? Didn't I know in that previous video last week, I said that target was going to be 98, and we saw just exactly that, hitting 98 as expected there for the dollar index, as you can see. And understandably, this is a massive area, right? So typically when we come down to big areas, we're going to face a bit of friction. We're going to face either support or resistance, whatever the case may be. And here, obviously, in this case, we found very big support, big bounce there. And obviously just coinciding with those calming of concerns that, look, maybe US and China could agree a deal. But guys, there's a long freaking road ahead. I can't stress that enough. And there's a lot of talk and a lot of dialogue that needs to happen for, for things to really to get a solid solution. Now, here, as I say, really, when you look at the next major target zone for the Dixie, if we are to push to the upside, I think we're going to be capped into that psychological 100, and I'd say 150 tops. Okay, unless anything change, something has to change drastically on a macro level in order for the dollar to carry on flying. Flying in order to stop it really from just further coming under pressure. Structurally, as I've been going over in recent weeks, look at the dollar, look at that Dixie, lower highs, lower lows. It's very clean to the downside, and ultimately we're still in structure. And as I say, we need something big to break it out of that. Now, when we look at the calendar for this week, it's obviously very heavy. If we just filter everything out, just focus on dollar for this week, it's a big one. Okay, we've got obviously all the labor market figures, and we've seen a slowdown in labor market figures of late. Generally speaking, a softening thereabouts in the past readings. Obviously, previouses have been revised lower. We've seen the unemployment rate in the United States ticking higher to 4.2%. We've seen wages coming down. They've softened a little bit. Remember, we've got up to 0.5%, and we are softening a little bit here. So obviously that would be, guys, the key for me now, right? The key for me and for the markets is core data such as this: GDP growth, inflation, the Fed's preferred measurement of inflation, and of course the labor market. If these numbers start cooling, that's going to reignite that dollar selling. I can't guarantee anything. Nothing's guaranteed in these markets, but in my opinion, obviously not financial advice, I would expect the dollar to resume that downside and respect that structure that we're still seeing at the moment that remains intact, unless we see these data surprising to the upside. And I would be very surprised if these sets of figures here come out strong this week, because we are seeing signs of cooling in the US economy. It's only so long it can run hot for, especially where we've had rates for higher for longer. They've only been very gradually, on a minor level, coming down. So I think naturally we have to see the economy slowing down, and I just think that will accelerate fears around the United States and people just trying to get further out of there. It will encourage that another wave of downside pressure. Now, obviously, we're heading into the last week of the month for April. If we look at obviously the monthly performance, wow, that is a massive bearish candlestick, and really we're leaving room to carry on and push to the downside. I think we could still see some selling in May, in my opinion. Obviously, so long as this data proves to be softer, and then obviously, as I say, that narrative, we'll have another narrative. Obviously, we had the narrative of concerns around the United States because of the tariffs, but we'll have a new narrative of, US economy is slowing down, we're underperforming, we doesn't have that edge that it had before, so let's sell the dollar and find yield elsewhere. So I still think the dollar is vulnerable this week. Obviously, last week, just quickly recap, the services is bigger than manufacturing, and in terms of the US economy, and that cooled down to 51.4, a lot lower than expected and a lot lower than that previous number. So I do see some vulnerabilities in this set of data this week, and I do believe that this dollar should carry on selling at some point. Particularly as I say, when we focus on that monthly, it looks like we're in for some selling for the month of May. Volatility also expected for the Canadian dollar. We do have a couple of key events. We've got the federal elections where Liberal Mark Carney is expected to come out on top, and that is the general expectation. That is sort of largely priced in. I don't think we'll see much of a reaction. If anything, to be fair, we could see a little bit of CAD weakness, which we'll take a look at in a moment. But these results are due out on Monday. A shock conservative win would be bullish for CAD because they are promised tax cuts there. And then we've got Canadian GDP. Now, data, when you look at Canadian GDP, data in general has been improving a little bit. As you saw here, the core retail sales picking up to 0.5%, although the previous was revised lower, and the retail sales number coming in line with expectations, a little bit better than the previous contraction of 0.6%. But CAD has managed to gather some ground because it had been, kept out of these tariff concerns. But then Trump, again, as Trump is, he said, there could be tariffs coming back into play for Canada. When we look at dollar CAD, obviously I said to you guys here, messy. But on the monthly, it remains extremely bearish. Obviously, with that dollar weakness, taking advantage of that dollar weakness. On the weekly, we've just been consolidating, really. It's the same analysis as last week, really, guys. We've just been consolidating around this mid 38 region. Your downside scenarios, if we get those rejections here, obviously structure is to the downside with the lower highs, lower lows. So long as we get these rejections here at this new potential lower high, I want to see that continue to the downside and heading back within this range, as I explained previously, that contain the price for a very long time. And, we'd just be looking at working potential zone to zone 136, 134, 132s. Okay. But let's keep an eye on, obviously, these election results and obviously, of course, the Canadian GDP figures. But I still would like to see, given the monthly as well, I would still like to see downside risks for dollar CAD. For CAD to strengthen versus the dollar. But obviously, we need to break this mid 38 region. You can see on the monthly, it's actually quite big. If we go and make a chart a minute and get all that mess off the chart, you can see where we're at is a big monthly area. Look, bam, 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 bam. So once that gives way, if that gives way, we're likely to see some stops triggered to the downside and a fresh wave of downside momentum. So keep an eye on CAD this week. Volatility also expected for JPY yen, because guys, we've got the Bank of Japan rate decision where we're not expecting any fireworks. These guys are, been on hold for a little bit. Obviously, they'd raised rates from negative, and you got to remember, Japan had low rates and negative rates for a very, very, very long time. These guys are known for moving extremely slow, so we can just expect that. I know Mark has been excited, like, yeah, these guys are on a rate hiking cycle now. Everybody else is, keeping rates unchanged or cutting rates rather. So there's a bit of a divergence, but they're moving slow. And Ueda spoke recently, last week actually, and he just said like caution around rate hikes because of the uncertainty to the global economy with tariffs. So they're probably just going to sit tight on their hands for now. Note that rate hikes can still happen and will still happen this year, but we're not in a rush to raise rates because we want to observe these risks potentially. So I think yen could be vulnerable there if they don't hike, even if they give a little bit of guidance, unless they say, look, rate hikes are imminent, we're going to be hiking at the next decision. Unless they say that, if they don't say that, then yen remains vulnerable, in my opinion. If we look at dollar yen, obviously we've bounced at a very key area here at this sort of 141 area. You can see the significance of this zone, and obviously in fitting with the dollar pullback as well. The only way we'd get downside is if we break out this zone, break out retest, and then we'd drop to 134, 133. But otherwise, looks subject to some buying pressure. Obviously, structure has been to the downside. So keep an eye on that. It's still vulnerable to potentially printing a new lower high. But yen does remain vulnerable. When you look at some of these other yen pairs, obviously we're caught within a bit of ranges at the moment. Look at euro yen, awful range. But I think this could go up and challenge the upper part of this range, really coming in towards sort of 164, 165 if the BOJ does disappoint there. GJ has obviously staged a rebound on a weekly reversal candlestick, closed above, and in further buy momentum. Perhaps we're forming a bit of a, just as I'm viewing this right now, we could be forming a potential bullish channel there, descending channel subject to a breakout to the upside. A lot of these yen pairs at the moment, even look at Aussie yen, we've staged rebounds, although obviously structures to the downside with some of them like Aussie yen and NZD yen, there is room to potentially break out structure near term because of maybe yen bulls getting disappointed by the lack of cuts for now. But as I say, NZD and AUD, as I noted in my previous video, obviously they're a little bit more vulnerable and delicate because of the potential risk with Chinese economy and tariffs. But some of these yen pairs are, I think, like GJ, particularly EJ, and maybe UJ. It depends on the dollar data, but I'd say more so EJ and GJ look subject to some further buy momentum, especially if we get that disappointment. But we'll see the broad yen weakness if they don't leave the door open to an imminent hike. If they just keep saying, "Oh, we're going to hike again at some point," then I think yen does remain vulnerable. So keep an eye on that data, and obviously look, these guys are prepared to hike rates again because inflation's still above their target. Look at Tokyo core CPI last week. Inflation's elevated higher than expected, 3.4%, higher than previous, and yeah, higher than expected, as I say. So they will hike at some point, and that divergence will come into play. But right now, I think yen bulls are going to get a little bit tired of just this waiting game. Aussie dollar, we do have key inflation data, and it's important because markets are trying to suss out when the RBA are going to are going to be cutting again, right? Are going to be cutting rates. Obviously, there been a little bit of pause at the moment because the labor market's still a little bit buoyant. We have seen some softening in the labor market a little bit, but inflation still remains sticky. Remember, they want inflation back down as close to 2% as possible, and it's still above that at the moment. Mixed readings here expected, elevated on a quarter on quarter, year on year expected to cool slightly, but still be above their target. And the trimmed mean CPI expected to be elevated at 0.6%. So if those figures are somewhat mixed and remain sort of tilted towards the upside, that's going to support AED because it'll just push back some of the rate cut bets. When you look at AED, obviously we've staged a decent rebound. Obviously, I keep saying that AED, NZD do remain vulnerable, but we're taking advantage of the dollar weakness that we've seen. Like on the monthly right now, look at that. Staged a decent rebound after that consecutive downside pressure. Big bullish candlestick here on the weekly. We've basically effectively broken the structure. You know how we're structured to the downside, then we had that period of consolidation, and now we're trying to break out this period of consolidation to the upside. Okay, we're trying to basically just pare back a lot of this downside move. On a daily here, getting comfortable above the top part of this range here at the 6400 area. If this holds here, then we can carry on and pushing in 65s and then in 65.50 and effectively just come back to where we broke this key trend line that had been supporting the price since 2023. We could basically come up for a big retest of that. If we just extend this trend line, there'd be room for that to fly all the way up to potentially in 66s. That's just my potential opinion there. But obviously we have to play it sort of day by day, session by session, week by week. And so long as we continue to see that dollar downside, and obviously this data does support a potential pushback on rate cut bets, then AED has a chance to push to the north there against some peers across the board. And Euro, we also have key CPI data here from the Eurozone. Worth keeping an eye on, obviously Spanish, obviously more importantly Germany are the largest economy in the Eurozone, remember, and then obviously the Eurozone as a whole. As you can see here, guys, inflation generally expected to be sticky across the board, really, bar the Spanish, but Eurozone as a whole expected to be sticky. Germany expected to be sticky. The ECB have been cutting rates gradually, but inflation still needs to come down. We've had a big wave of capital flows coming in, as I explained at the start, with outflows from dollar, inflows into Europe, support from that German stimulus. I expect inflation to remain still sticky for now. And obviously that will push back some of the rate cut bets, some of the bearish bets against the euro. Obviously, euro has been very supported across the board. It has obviously lost a little bit edge, just purely technical, profit taken against some of its peers. But if we look just at the base case for euro dollar here, incredibly strong monthly performance for the last couple of months now. And really, we're probably going to see some buying in May. The way things are shaping up there on that monthly candlestick, incredible. Yeah, so on the flip side to the Dixie, obviously we've seen that pullback on a weekly, run into heavy supply zone here. As you can see, 115, 116, there is a lot of supply there. So we've had a pullback. On a daily, yeah, you could just see this broad consolidation. The bulls don't want to give up yet. Okay, and we are sort of just supported at this. I mean, you could just mark up a trend line there, but just basically supporting the price, trying to protect sort of 113, 112.50 area. So long as this holds, we could end up sort of bottoming out here, at this sort of area of support, maybe forming a W for a breakout retest and then a push to the upside. But obviously this is going to be very much dependent on the dollar. This is all about dollar this week. Obviously we could keep an eye on those European CPIs, but this is very much about a dollar. I am still tilted towards some buying pressure, but we just have to get through this period of consolidation for now. But I would expect some continued buying in the month of May as well. Okay. So once again, guys, another week filled with events and I'm sure plenty of volatility. So make sure you have your finger on the pulse with those fundamentals. Other than that, have a blessed and amazing week, and I'll catch you on next video.